Risk disclosure. This presentation is for information purposes only and doesn't constitute investment advice nor an offer, solicitation or recommendation to acquire or dispose of any investment or to engage in any other transaction. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading foreign exchange, futures, cryptos, and equity markets can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. Welcome to lecture 3 of Trendlines. In the first lesson, you learned about traditional trend lines. In the second lesson, we investigated a new way to draw trend lines called trend lines. Now, at this point, you may be wondering what to do with these trend lines and how a trader can effectively use them in the day-to-day trading. There are a few different ways that a trader can use the trend lines. Probably the most important is a trigger to enter trade. This can be either through the break of trend line or the trend line providing support and resistance. We will focus on the breaking of a trend line to enter a trade in this lecture and using them as support or resistance in the lecture. Okay. Now, another way to use trend lines are as targets for the trades. Trend line can serve a target area for a trade that is approaching the trend line in question. A trend line that triggers a trade also has built-in targets. The targets are the initiating point and the defining point. Trend lines have two natural built-in targets for when the trend line is broken. The two targets are the points that were used to draw the trend line. We covered these 2 points extensively in the last lecture. They are the initiating point and the defining point. If you are unclear of initiating and defining points for the trend lines, please stop this right away and go back and review that simple concept because it will be repeated a number of times. Alright, now as you can see, we have discussed it multiple times. This is the trend line with this initiating point and the defining point, and it's upward sloping. Now here, this trend line is broken, and as we have discussed earlier, this supportive trend line will become a resistance area up to this point. So this line is no more a support line, it's a resistance line after this point. And now once it's broken, it gives us great opportunity to enter into any trade. Since this was upward sloping, and once the trend will broke down, so it will turn from bullish trend to bearish trend like this. Now, of course, if we have to sell here, whether it's new one or the liquidation of the existing position, whatever, if we sell here, there are 2 built-in points based upon this trend line. One is the market should come to this point as the first target, and final and second target is initiating point. And we presume that once the trade line, which is upward sloping, is broken, so the first target to come down is defining point and second is initiating point. This is very, very important point to understand. That's another example of a real chart. This was the initiating point, this was defining point, and finally it broke down here. This is the breakage point basically. When first time it's broke down, and we have not redrawn it. Why? Because we entered the trade here. If not, we could have redrawn it using this bottom instead. But as we have studied once, we have entered any trade, then we will not redraw the trend line until the trade is closed. So this is selling signal here. So based upon two built-in points we will discuss, and this is a real example by the way. So after that, market made a little consolidation and tested this level again. We will also discuss this concept of testing this trend line in next lectures in detail. And then again it convincingly tested and made a piercing pattern and closed down, and then this shooting star, and then start coming down. So this was the first target, being the defining point, which is met. And after that there's a gap, and again market start, and then another trading gap of trading session, and finally it hit the second target, which is the initiating point. Remember, all the examples we are using of the charts are real time, so it gives you more confidence, and you can draw them on live mode as well to see this. So upon breakage of this trend line, we saw these two targets are met. As we discussed, these are built-in targets once the trend line is broken. The defining point is a key target location for a trade trend line. Many times the market will react to a defining point, which is why we consider it to be a target. One point is considered is when you get a move beyond the trend line, but the defining point is too close to provide proper reward to risk. If this is the case, then either the trade will have to be passed, or you will have to wait for a move beyond the defining point to trigger the trade. It's obvious, and we will discuss it in a few lectures after that, probably the 10th one, that when you should enter and when you should not, what are the proper risk management techniques and risk to reward ratios and other stuff. If it's too close, it doesn't make any sense to get few points and then there is a chance, because this defining point is generally achieved, not all the time, but most of the time in such breakages, and the initial point is not that much achieved as it is the defining point. But if the defining point is too close, then we must need to rethink what we should do. As you can see in this area, it was the initial trend line, and this was the initiating point of this trend line. This was the final defining point because there were three touches. So from this we draw another line as we have studied. So this becomes, this final defining point becomes initiating point, and we draw based upon this. Now here this is broke, but you know, the first target is what? This defining point of this trend line, and second is this one. although this is again a real example, and you see finally it went up, but here it doesn't make much sense to buy here because this very small space available here, until and unless it is coupled with some other formations and strategies which we'll discuss in next few classes. So then second reference we have is this line as well, which was initially drawn, and we see how closely it made a regression here and then retraced, and then finally upon the breakage of this point, which is beyond this point as well, it made clear move. So in such situations when there is very little difference available, so we'll have to avoid such situations, and instead of entering trade here, it makes more sense if we enter based on this line. And here if we enter on this line, then we see this was the defining point, which is well ahead, and we have too much space as we have discussed in the space. If we look on the left, this is the space. This is the end of simple space, because this is one opposite color candle, and here it's making advanced space. And then third reason is this is the defining point of this line as well. So based upon this, realistically speaking, this could be the first target and this could be the second target, and this is the third target based upon initiating point of this trend line, which is broken here, and it met all three targets and still going up. Right now we are not discussing the other technical indicators, just based upon the simple strategy of entering the trend line upon its breakage. Trade trend lines also make great targets for taking some profits. Even if a trade does not take any profit at a trade trend line, they can use the price action, reaching a trade trend line as a place where they can move the trailing stock. And this is a very important strategy, and it really helps a lot increasing your profit margins in real trade examples. Sometimes trade trend lines will be so close together that they can distort reward risk ratio, so the trader may pass on the trade, as we have discussed in this previous example. Here again you can see this was simple trend line, and then we redraw a trend line from this defining point, making it initiating point for this trend line. And here we see this is the defining point of this line, and once it's broken, we enter above here. We have a couple of other reasons to enter as well. First reason is this breakage itself. Second is this clear space on the left till here, and after that advanced space till here, as we have discussed space and advanced space in previous few lectures. And this is also the defining point of this trend line. So these are 2-3 reasons we have. The more reasons, the more logics we have, it makes more sense to enter into any trade or take profit likewise. So this is the trade trigger, and this is the target, because this is anyway a resistance line as well, which is in between these 2 points. So likewise we have to be a bit flexible while choosing our target. So now that we have reviewed both targets from the trade trend line and using another trend line as the target, You may be wondering how to enter a trade with the trend line. We use a break of the trend line to enter a trade. I repeat, it's really important. The best use of the trend line is we use a break of the trend line to enter a trade. At this point, we are only examining the concept of potentially triggering a trade and not considering reward risk or stop placements. When using a trade trend line to trigger a trade, the highest probability entries are achieved by waiting for the candle in the time frame you are trading to close. For example, if you are drawing the trend lines on a daily chart, a daily close that violates the trend line will potentially trigger a trade. A simple break of the trend line intraday will not trigger the trade because at closing it may close up or down. So closing are the most important to watch. Whatever the time frame is, if for example you are trading in 60 minutes, right? So let that candle to close. Even before closing few minutes, maybe it trigger the trade, and sometimes we may take action on based upon that, but exceptions are always there. An exception don't make rules, and that exception could be like there is some data, some news, or that level was psychologically or technically very important, but still that would be low probability trade. To have high probability trade, we just discussed very important concept that we need to wait for the close. When using trend lines on longer term charts, 1 hour and above, it's best to wait for the bar to close. When using short term charts, you can use a simple break of the trend line instead of waiting for the bar to close. This will lead to more trades, but will also lead to more false moves because of the probability. For a trader using multi-time frame analysis, they can also consider using a trend line on a longer term chart and use it to trigger trade on a shorter term chart. For example, using a trend line on a daily chart and entering it on a break with a 15-minute chart. If you are using the multiple time frames to enter a trade, it's generally better to wait for a close beyond the level on the shorter term charts to validate the trend line being broken on the higher time frame charts. For now, however, we will just focus on proper entries on the longer term charts. There is an entire class on multi-time frame analysis that covers this concept in depth as you progress. So here we see, in this example, this is a perfect trend line, initiating point, confirming point, validating point, 3, 4 more touches. Here, it dipped below this. If somebody could have entered a selling position right here, it could have been dodged, because in the end, we did not redraw this line, and we see this closes above, back into the channel support line, and of course we will redraw this line now, and this will become the bottom. But if somebody could have entered on this low probability trade without waiting for the close, you can see it could be a false trade, and there are great chances to be stopped out. Likewise, you see this is the original line, and then some other line is sloping upward. So trend line broken here, but no close below here. A little touch you can see, and it's quite a few candles, and first, second, third, and this was fourth, and final attempt with very much congestion, so it was a pressure here, and many people could have trapped here because they say, okay, this is gone here, but in the end it closed a little above and then bounced back huge. So this is another example of not waiting for the close, and likewise it's here as well. The best entry when trading a close beyond a trend line is to enter the trade when the close occurs, whatever the time frame could be. There may be the times when you were unable to enter the trade at the time, or away from your trading screen at the close of a particular time frame. Often in these instances you can get a second entry, so you don't need to rush and you don't need to just have patience. You will find a lot of other opportunities. Just don't follow the chart like this in falls without closing. Just follow the plan instead. Now there is another very practical concept, and in real charts you may see it quite a lot of times. That is kiss the trend line goodbye. The second opportunity is called kiss the trend line goodbye. Occasionally the triggered trade will come back and revisit the trend line and then proceed back in the direction of the trade. We call this kiss the trend line goodbye. This is the second chance entry. However, don't count on it because it doesn't occur all the time, but it happens. Generally, I would say most of the time, and you can see the charts. And in addition to some other indicator and reasons, more and more reasons or logics you have, it will give a perfect touch. And always we should use all these things in combination. Alright, so here we can see this is a real example of chart again, and 2 times it happened in this. This was the original line, and then it's read one, initiating, transforming. Here it's broken. Based upon this, and we have clear space as well on the left side. So it makes sense to buy here, of course. But what happens generally? We are not talking about stops where it could be, which we will discuss later. Because right now we are moving one by one, so you could master all the concepts and then jump to next and add up the things we learn gradually. Alright, so here it broke up, and in the next candle it continued, and here at this stage apparently it was looking like it's gonna hit this, but suddenly it started moving down. But this, remember, as we have discussed before, we will not remove the trend line once we enter to trade. So now this line will remain there. We see it's coming back and then just touch this line and close almost on it, and then here again touching it, and then finally making upward move from here by touching this line again. There's multiple concepts. Since this was a resistance line as well and resistance broke, so now it has to behave as a support line, and it did it here, and market came back actually to test this support, which we call kiss the trend line and then goodbye, and start moving up, because after second attempt of this line, which is of course below this point, but since it's sloping down, so here it made a rotation on second attempt of the support and then went up and hit this line target, which was the first target. So this concept, which is very much helpful a lot of times, is called kiss the trend line goodbye. or you may call it touch the trend line goodbye, whatever is appropriate. The idea is just to memorize this, whatever the terminology could be. So this is another example, and it's broken here very decisively, but again in the next two candles went up, is here, and then again start moving back, and this was the original line being the first target. Also second reason was this clear space, simple space here. So these are 2-3 multiple reasons to choose this as a target. We'll discuss this in more details as we proceed with multiple strategies. Okay, we have already taught the concept of rotations and that they are potentially stopping points for future price action. We have also learned about the concept of space and how it naturally removes rotations from the price action on a given time frame. If you need to go back and review these concepts, now would be a good time before you continue with this section, because I presume whatever has been taught in previous lectures, you have good practice of it and strong hold of it. So based upon that, we'll presume few things as understood. We have already examined how to trigger trades and targets when using trade timelines. Now let's take a look how we can apply the concept of space as a filter to take a trend line trade. Taking a trend line trade into space dramatically increases the odds of a successful trade. Just see it here. Now we are combining space and the trend line. These two go almost side by side most of the time. We have already noticed in last examples. Now let me explain it here. This is simple trend line, initiating point, forming point, so on. And from here we see this is space. This is space, right? We have discussed before multiple times. Now here the trend line is broken, so there is selling opportunity, and the first target should be looking immediately left, this first space, so the end of this space. So this is the end of the space. We'll put a line here. So this is the first target. So once we sell it here, here we also see it broke down, and in next candle it again went up a little bit and touched this point in collaboration with multiple points we studied. So it kissed the trend line and start moving down again, saying goodbye, and departed to the target, and here we achieved the target. This is a real example as well. So space and the breakage of the trend line. Another example, here we see, although it was range bound, but this was sloping down trend line, it's broken here, and then we see this was the first target because this is a big space, and its second target was the initial point based upon this trend line strategy. So these both are hit. When using the concept of trend lines and trading into space, keep all the targets in mind. The first target will be the most conservative target. It could be the defining point, the end of space, or another trend line. Simple space is more prevalent. Simple space is more prevalent on longer time frame charts. On every short-term charts, if you are using the concept of trend lines and space, you will be incorporating more of the concept of advanced space. When trading very short-term charts like 10 minutes or less, the importance of clearing the space diminishes. First of all, I don't really prefer going beyond 15 minutes chart in any case, and that too, the trading decision should not be taken based upon 15 minutes chart. Yes, if you are taking trading decisions based on 4-hour chart and it's giving you signal, it's breaking some trend line, and then you further go down to 15 minutes to exactly pinpoint where you have to enter, then it makes more sense. Trade trend lines or higher time frame charts are more important than low time frame charts, because multiple times we have explained you that more time means more bars mean more data and more history, and history repeats itself. This is the base of the technical analysis. So once we have more history, so it gives high probability trades. Longer trend lines are more important than shorter trend lines. Of course, again, more data, more information, more history. Trend lines that have been tested multiple times are more important than trend lines that have not been tested multiple times. So, assignments. Pick a daily 60 minutes and 15 minutes charts in different markets. And by the way, this is an ideal combination for a day trader as well. You should take decisions based on daily, but maybe entry or exiting or limit or stops could be helped out on low time frames like 60 or 15 minutes. So pick a daily 60 minutes and 15 minutes chart in different markets. Correctly draw trade trend lines that have occurred in the past and look for trades going into space. Make sure you properly identify the initiating and defining points. Correctly identify at least 2 targets for each trade. For example, look this live chart right now of XAU gold. Here, if you can draw different trend lines as we just discussed, draw as many possible as we just discussed in the assignments. So this is the one trend line we draw, and then this is the second, because we have to examine the history, and then this is one trend line in the past. So if you examine all, you will have a lot many clues, what we have just discussed. This is a trend line, this is broken here, after that went down, but again revert up back, kiss the trend line, make congestion, again up, but still could not touch this and come down. Meanwhile, this another trend line which can be drawn in the past, initiating point, proper defining point, again it's broken here and pierced up, pinned up, and then close near to this line, and then again start moving down, multiple options, and then start moving down here. This was the first target, defining point, it's achieved here. After that, this was the second target, this trend line, which is again achieved in the same candle. After that, little congestion, and then finally this line is broken, and which is the ultimate trend line. And once it's broken, as we see, this could be a realistic target area, because this is very decent space here. So this is a space which ends around here, which is little above this defining point. We have to be a little flexible, and if we see this was a range which was broken previously, so even we can make it a little above here. So this area sounds more reasonable as the first target. Maybe markets start moving again, and there are multiple concepts in place. It might go up again to kiss the trend line, and at the same time you see since the channel is changed, before it was upward sloping and now it's downward sloping. So if we see this is another valid support line, right? And so most probably it may touch this area. There are some other moving average reasons which we will discuss in next few lectures, and most probably it's gonna retrace here again, making a rotation, and then originally back to this area, which would be a reasonable target. Okay, so finally the summary. This lesson covered an entry strategy based upon trade trend lines. It covered the importance of the closing price triggering the trade on longer charts. It also looked at combining the concept of space as a filter when looking for a trend line trade. There is a lot of information covered in this lecture. Make sure you watch it multiple times and have a lot of practice on the charts with the proper drawn trade trend lines. Happy trading. See you in the next lectures. And that will be the fourth one in the final lecture of